Hi, this is Joe Rabil. Just wanted to check in again. I think we're at a unique time in the market that I thought it was worth describing why it's so important to know where you are in the bigger trend of the market. If anyone's been investing or trading for a long enough period, I'm sure you've noticed that sometimes you'll be trading a specific pattern or buying pullbacks or buying breakouts and making just money hand over fists. And then all of a sudden you'll buy the identical pattern and it won't work. And then you'll do it again and it won't work. And you try and buy a breakout and you start to get frustrated and you keep sort of pushing the envelope and feeling like, these trades were working a few months ago and now they're not working. And you just don't understand. And I think it's where a lot of people go through and I know I did for years, where I continued to say, you know what, I've got this low risk idea generator. I'm going to use it in every market environment. And it really just doesn't work that way. You have to know what type of environment you're in, both in trend and in volatility, to know what types of patterns to be playing. And you have to have a couple different patterns in your arsenal, because if you just play one pattern, you're going to go through struggle periods, I think. So anyway, this graph is what I've done here is I think if you look at the blue line and you were to pretend this was, say, like the spider chart, the SPY for which is a good proxy for the general S&P 500. And pretend, let's say we're looking at this, and I think the best time frame to look at this in is like a weekly chart. And what you're looking for is, what is the trend and the volatility measures and the momentum indicators telling you about the current trend. I've got this green arrow showing where you're in a period of sideways kind of consolidating, basing, and then the green arrow is pointing out where you're starting a new uptrend. From that point on, I think you can successfully go and identify your breakout trades and your pullback plays. The 2 time frame environment that I talk about, where the higher time frame is up and the lower time frame, you're looking for the ABCs down to support and into and look for the reversals on that time frame. Those will be incredibly successful all throughout the green arrow period. The patterns where the longer term time frame is basing out and starting to turn up, and the lower time frame is showing really good momentum coming out of a base, you can buy those patterns successfully. And if you look back through, say, 2013, 14, 15, and identify a lot of those patterns, they were just, it's periods where you feel like you are just so smart because everything you do makes money. The type of patterns going long are just very, very successful. And then you reach a period where the market, say, breaks its uptrend line, shows divergence, one of the two, or starts to chop a little bit and move sideways. And then all of a sudden you try and buy those same pullback patterns and you start taking a loss, and then you take another loss and you take another loss. That's usually going to happen in this period where the market is in an indecisive stage. Every time you go through a stage 3 uptrend does not mean you're going to follow with the stage 4 decline. You could go through a sideways period and then break out and go back to the upside and have another green arrow. But I think it's important to recognize when you're in this phase where you're no longer, the uptrend is over, but you may not be in a downtrend yet. And through that period, I think the play is, both in a basing stage and in a topping stage, you're looking to be more of like a buyer at support and a seller at resistance. It's a very hard adjustment. And for some traders, it's better to just recognize you're in this environment and maybe just stand aside and not play and wait for a period where you're either in a strong uptrend and play breakouts and pullbacks, or you're in a strong downtrend and play and sell breakdowns and sell rallies. So all through this period where you start the red arrow, you've broken down, you can play these patterns. You can sell breakdowns against support, and you can sell rallies into resistance. and you will be successful. In a lot of ways, you will be, might be even, if you have a real downtrend that's really ferocious in the general market, you'll make more money in the red period than you will in the green period, because it happens at a much faster rate. I think you have to be a little bit quicker taking profits, but the steepness of the decline will probably help you do that anyway, because you'll be up a little bit quicker. So I find it to be a difficult phase in the red period. While things are down, it can be difficult an adjustment to make, but once you understand that you're trying to take profits a little bit quicker, you can make a lot of money on the downside. So the key thing here I'm just trying to point out is that you can't just go with one pattern and play it over and over again, no matter what type of market environment you're in. If you have a real quiet, let's say a low volatility environment in any of these three areas, I would consider standing aside. You need enough volatility trading against support and resistance to be able to make money in going in each direction. If it's quiet, the upside, the downside to the upside is probably not worth it. And a lot of times, if there's not enough volatility, you'll see that in the form of risk reward in the trades. But if you have enough movement and enough volatility, you can certainly play those type of patterns. And I just think you need to have that in your arsenal if you want to always be trading, all throughout the different market phases. Hit the like button and subscribe if you want to see more videos like this. Thank you.